Well, we're up to the midterm almost. So, what I'll be doing today is just a lecture over auto insurance and also a little bit of health insurance. There's not a whole lot we can talk about with health insurance because, well, it's just, well, I'll kind of explain it when we get there, but it's a difficult situation. It's not even necessarily insurance in some cases. So, but then there'll be a separate video that will be a review for the midterm. And again, we'll cover that. So again, on the midterm, when you turn that, when you access it via Blackboard, make sure you also turn in the homework at that time. So the batch assignment will be due at that point. Not a whole lot more to it. Should be fairly straightforward, but we'll jump right in. So auto and homeowners insurance. Why you have insurance and just the whole concept of insurance, and this kind of explains also why it doesn't quite work for medical, is that the concept of insurance, from a business perspective, is that not everybody is going to have a bad day on the same day. There's a business model that can be established where a company can offer insurance, so they can basically take all of the policyholders' money, small portions, and then when something bad happens to one of those policyholders, that can be paid out, and the insurance company can still eke out a bit of a profit, maybe a good profit, whatever. But the problem is that since it's private insurance, and since public insurance has got its own issues, but it's certainly public insurance will never be in vehicle, automobile insurance, or lots of forms of homeowners insurance, because it's going to be a business model, and it needs to have a profit in order for the companies to continue. We will talk a little bit about flood insurance. Flood insurance is an exception to insurance because, as you see, like in the Carolinas right now, or I guess it's just North Carolina up there in the mountains in one particular area, and maybe a few other areas in the Carolinas, Georgia got hit by the hurricane. When floods happen, they kind of happen to everybody at once. So the reason why there is no private flood insurance is because, well, it's illegal. Because what would happen if a company accepted your premiums for flood insurance? They would accept your money for something they couldn't deliver. What would happen is, they take your money year after year after year, and all of a sudden that 100-year flood happens. Everybody gets wiped out, and guess what? So does the insurance company, because they don't have that kind of money to pay everybody at once. That's not how they're set up. So they would, surely take profits year after year, and then the one year that they're counted on to pay out to everybody, they'd go bankrupt, and all those policyholders would be left hanging. So they don't allow companies to write private flood insurance. Now, I was in a situation, well, I've been in a situation a couple of times. I always seem to buy things on the water, and I've had to have flood insurance, and it's pricey. And usually your normal carrier, the people who sell you regular homeowners insurance, will act as a broker for the federal government. But the federal government is the one actually offering the flood insurance. And they do accept premiums, but they accept the premiums with the full understanding that it's not quite a welfare program, but it's not going to be a net gainer for the government. And obviously the government, when they have access to a printing press, they can just print, borrow money, do whatever they want. They're not going to go bankrupt, so they can bail people out. Although that brings us to the curious situation in the Carolinas where your house is wiped out, everything you've got is wiped out, but don't worry, the government's got $750 for you, a one-time payment. Anyway, we'll see what comes of that. This is a political year, so it's going to be interesting to see if that changes. I think it might. But anyway, okay, so that's the concept of insurance, that you have a certain amount of risk in your life, you don't want to jeopardize everything by being fully exposed to that risk. So you pay a private company a premium to accept that risk for you or mitigate that risk, and then you move on. So you can use it for auto, home, liability. Liability means a lot of times, well, in most cases, the government does not care what, and society in general doesn't care if you want to, in essence, be stupid and have bad things happen to you. They're not going to necessarily try to protect you from yourself, but they will try to protect others from your behavior, especially if it's bad. There's a concept in there of negligence. If you are just don't care, the example they always use, and it's not so applicable in Alaska because most people don't have swimming pools, but in the lower 48, if you've got a swimming pool that's a kind of a known, well, is it a hazard? I guess it'd be classified as a hazard, especially if it doesn't have a fence around it. But it's an attraction to, perhaps young children and other things. And if you don't have a fence around your pool, somebody drowns in your pool, especially a young child, you're going to get sued, and it's going to go very badly for you. Because not only are you going to be found liable, meaning it's your fault, but negligent, meaning, yeah, you knew it was stupid and you did it anyway. And so, there's personal, I know some personal injury lawyers, and these guys are up front. In fact, I did some property stuff with them, and they said, oh, yeah, we're not making any money really off me, the types of things we were involved in with me, but they were just so burned out from doing the personal injury stuff. They made a bundle, and I guess a portion of that actually got shared with the clients, but they kept a great deal of it. And anyway, they would live for negligence. So anyway, you're trying to do this to protect your existing level of wealth. Again, you may not have so much wealth, but what you do have, you don't want to be just in debt trying to pay off lawsuits or other things. There's a couple, not to belabor it, but I had a business where I was exposed to an incredible amount of liability based upon a campground and people with four-wheelers and the rest of that, and it got to the point where the insurance company didn't really want to deal with me, and it ended up modifying and essentially closing the business. Fair enough. So risk, exposure to events and perils that cause financial loss. Risk management, avoid risk. It's really tough. You can mitigate risk, you can reduce risk, but avoiding risk, in an automobile standpoint, you would have to not drive. But then you can have somebody else drive for you, and you're still going to be out there unless you're going to be, home alone in the dark doing nothing. You're going to be out there, and so what you want to try to do is reduce risk. You can accept the risk. The state of Alaska is actually self-insured, which is kind of interesting. They've got fairly deep pockets, especially for a state, and they don't have private insurance companies insuring their vehicles and other things. They are self-insured. You can actually do this yourself. If you're some high wealth kind of person and you want to go through the trouble, most states, including Alaska, have a provision where you can post a bond and be insured. So there's a legal requirement for auto insurance, but that can be satisfied if you're, got enough cash. And you'd have to put up part of that, which is going to involve some expense as well, just to secure the bond and all. So you'd have to do the math to figure out whether it makes sense to be self-insured, but that's an option. And then so insuring against risk, basically paying a premium to somebody else to accept that risk, and they can do so knowing that the risk is going to be spread out amongst many policyholders. Yeah, they always get into this economic impact. Yeah, most requirements, it's state law, although you find out a number of people don't have insurance, and when they crash, they're already down on their luck. They're typically not going to jail or even penalized, from what I've seen. All right, so types of insurance. Yeah. Life insurance, again, kind of a unique thing too. We'll talk about that, but not today. Health insurance, we'll talk a little about that. But the problem with health insurance is, especially when you get into pre-existing conditions, because it doesn't fit the insurance model. It's something that needs to be taken care of, but it just gets very controversial. We'll talk about it. Relationship between insurance companies and premiums. So, yep, we kind of beat that in terms of the amount of money they take in and the amount of money they're going to pay off. So, you can get, not only, collision damage, but you can actually get maintenance things. They're usually not good policies, usually not a good deal, but they're out there. Liability, so obviously you're paying for the other person. If you don't want to cover yourself, your own vehicle, then you opt out of collision. Collision is what pays for your own vehicle. Now, if you've got a car with a loan on it, the loan company may say, whoa, wait a minute, that's our car, really. And so you will have collision. But if you own a vehicle outright, and it's a few years old, and I've done this a few times. In fact, I totaled out an old 4Runner that was probably worth a little bit, but anyway, I didn't have collision on it, totaled it out, wrote it off on my taxes as a total loss, and then sold just the salvage part for a bit. You can do that. Homeowners insurance, obviously. Liability insurance, and maybe an umbrella policy if you're starting to get more medical. Long-term care insurance. Yeah, this, again, is kind of controversial. If you start it when you're young, maybe you can get it when it's affordable. If you wait till you're in need of that, it's going to be very, very pricey. And it's kind of a sad thing. This kind of came to light in COVID. They were talking about all the people in nursing homes being killed. Not being killed, but dying. And come to find out that the average life expectancy in a nursing home on a good day is about 6 months. People go in there kind of for end-of-life care. So maybe that's a good thing, because they're not super pleasant places. Personally, I'm going overseas. I'm going to the, Belize, Costa Rica, Philippines, someplace. People can be handing me margaritas on the beach till my head caves in, and I'm good with that. I don't need to sit in a I'm certainly, Alaska's a great place, but if you're not outdoors, I'm probably not going to stay. So, disability insurance. Yeah, this is a lot of times that has to do with workers' disability and different types of policies. Some are private, some are actually state, where you have a deduction already taken out. And then life insurance. Life insurance can be, again, it's all these things. When you scratch the surface, there's a little more to them than you would think. Anyway, the insurance agents, a lot of the stuff has gone automated, or you may have some involvement, but not as much as usual. A lot of these things you can basically do online. The captive versus exclusive agent. Yeah, a lot of times it's more of a marketplace where there's several companies recommended, and it's not always what you think. Some of the big, insurers, Geico and Progressive, they're not necessarily as cheap as one would think. Sometimes you definitely have to shop around. I mean, obviously somebody's got to pay for all the airplanes and blimps and all the marketing stuff that some of these companies do, but anyway, shop around and you'll definitely find some differences in prices. So, but this personal agent, I that's not something I even want anymore. I had a homeowners insurance that was not a local company, but had a local agent, and they were out here creeping around my house, taking pictures, going, hey, it doesn't look like you're taking care of this or that, or not that I live in a slum, but anyway, it was like I'd rather that company just be, out of state. I don't need to speak to them. It's a long story with a particular home I have. It's it's going to get eminent domain because it was too close to the road. It's an old homestead. And because of that, I'm not really keen on sinking a bunch of money into it because it's probably going to get demolished. And anyway, that's a whole different story. But the insurance company is looking at it saying, it looks like it needs some paint. It looks like it needs this. Well, yeah. Stay in your own lane. Not your business. But, auto insurance. So, again, from a societal perspective, what they're concerned about is liability. You know, what you do to other drivers out there. Personal injury. I think I just spoke to my friends about that, and they were just telling me how profitable their business was, but how just soul crushing it was. They did not like the work they were doing, but they did it quite well. Anyway, it's the problem with this is that, again, it's kind of a gray area. You know, the example they used was somebody, driving down the road hits a moose, and there's a passenger. The passenger gets hurt. Well, somebody's going to have to pay to for the injuries of that passenger. Obviously, the moose is not a good candidate to be sued. So, what are you left with? The driver. Well, the driver was perhaps doing the speed limit, perhaps being vigilant, and a moose jumps out in front, and things happen. But that driver is going to be held liable and sued into debt if they don't have insurance. And it's, were they at fault? Were they negligent? Probably not. Could have been in certain cases, but anyway, from their perspective, they're going after that driver regardless, and it's not a great situation. So we talked about the contract between the insurance company and the policyholder. Yep. It's tied to a particular individual, vehicle, certainly. Do keep in mind, though, before you, especially if you're going to do any traveling and you're going to be renting a car, call your insurance company beforehand, if you don't already know, to find out what your coverage is. The guys at the counter there will, try to make you question that you're not covered or whatever. You need to know what your coverage is from your own insurance company so that you'll have kind of that peace of mind. I was at an insurance counter. This was in Texas, and there's a German. And again, I've lived in Germany for several years, and there's some really good things about Germany, but German folks, to stereotype the entire culture. Anyway, they're maybe a bit on I don't know what I'd say anal, but they're very concerned about some of the details. And the insurance, or not the insurance, but the rental car guy had to go through his little spiel about, oh, you want this insurance, that insurance, and he just has to ask those questions, and this guy just lost it. The customer did. Just, why'd you always do this? He just could not handle. But they were trying to get him, with basically upcharging. Oh, you want this insurance, don't you? You want to upgrade, don't you? You want this, you want the fuel. And it's all these things that make the rental car about 3 times more expensive. And in terms of insurance, if you've already got the coverage, it might actually be worse to have their insurance, because now you've got insurance companies battling over who's going to pay for it. One good insurance company is far better than, two bad ones. So anyway, know what you have before you go to rent a vehicle. Liability coverage. So, yep. You can see that these numbers, especially in the medical sector, the costs just get astronomical in a hurry. And your coverages that are mandated by law are quite low. So make sure you have sufficient coverage. You may not want to go with the absolute, well, you don't want to go with the minimums. Yeah, you probably want to go with something reasonable. And we'll look at the minimums here in a second. And liability coverage. Even the vehicle property limits, if you exceed the amount that's covered by the insurance, then that's on you. And so again, it can get kind of expensive. So the way they do the limits, they're quoted in these series of three numbers. The first one being the per person injuries, all the people, and then the property. So if you're in a couple vehicle accident and 50 grand is not going to go very far, and then medical stuff, who knows? You could get somebody who's going to be in physical therapy and operations, and you can exceed these numbers in a hurry. And then medical coverage in addition, so that's only for the insured vehicle. So in Alaska, for example, 50, 100, 25. So 50,000 for one person's medical injuries, 100 grand total, and 25 grand. I mean, and we're not even the worst. I mean, California, which is this just blows my mind, that 5 grand. I mean, you better be driving an old 4Runner to even 4Runners are worth more than 5 grand. So anyway, these numbers are absolute minimums that are out there, and most of the time people go a bit higher. Different states, again, but I'd say I don't see any of them that are really in the neighborhood of what you would expect. Again, these, another $5,000. Pennsylvania, that's, anyway, just odd. And just to get all the states in. So anyway, insurance is done per state. So not all insurance companies are available in all states. So that's why you may say, oh, I want to go with this one company I saw online. They may not be licensed in Alaska, for example. So sometimes you'll see that. Uninsured, underinsured, another type of coverage when, theoretically, if you get in an accident, it's the other person's fault, your insurance company should not be involved, or just minimally. But the other person's, it all works great until that other person doesn't have insurance, which isn't as uncommon as you think. Just because it's illegal doesn't mean that people don't do it. Comprehensive and collision. So collision this is your part of the vehicle. You get in an accident, it's your fault. You're out. You're paying for it. Sometimes it can be kind of reasonable. I drive, some vehicles that actually have classic car insurance for my 4Runner. I don't know that it's going to be a classic, but it's an older 4Runner and it's covered. My Corvette that I wrecked a while ago, it was classic as well. Great insurance company, super cheap. It sounds like I'm crashing a lot of cars here, but things happen. And then comprehensive is kind of the cats and dogs. There's floods, theft, hail. So different than homeowners insurance. You can get coverage for that through a private insurance. This isn't property. This isn't your home. Riots. You never know what might happen. Deductible. So one way to kind of safely get your payments down, maybe before you eliminate collision, which could cause a fairly hefty financial drop, is maybe to increase your deductible. So again, I've done this before where I've had like $1,000 deductible on a vehicle. And it just means that, let's say you have $10,000 worth of damage to your vehicle. The insurance company is only going to come up with $9,000. $1,000 of that is coming from you. So before they pay anything, you're going to put up, $1,000. As opposed to having, say, like a $200 deductible, meaning you're only $200 out of pocket. That's going to cost you a bit more. And especially on, say, homeowners insurance, they know that if you, say, have $1,000 deductible, you're not going to be bothering them for little piddly damages. You're just going to, suck it up, go, oh, yeah, it's, some door thing. It's going to cost me $1,500. If I file a claim with the insurance company, I'm going to have to pay $1,000, and I'm only getting $500 out of the insurance company. And oh, by the way, the insurance company now is going to notice that I filed a claim, and they're going to raise my rates, and I'm just going to go ahead and pay that $1,500. So anyway, so the difference with auto insurance as opposed to most other types of insurance is there is a requirement theoretically to have it. Now, homeowners insurance, there may be a requirement based upon your lender if it's still under mortgage, but if you own the home outright, you could probably skip it. And anyway, homeowners insurance is interesting too, because sometimes you can find out that you may not have in case of like earthquakes and other things. We'll talk more about that. So again, another reiteration of what the liabilities are, who's responsible for what. So big thing on any auto accident, this whole thing of who's at fault. You know, if you're involved in an accident, your emphasis rightly should be on making sure everybody's all right and, everything's off the highway and all that kind of stuff. But to talk about, oh, sorry, I crashed into you, or admitting guilt like that may complicate things later. So don't discuss things like that. What also affects your premiums? Yeah, the value of the car and the repairability of the car too. As I mentioned before, some of the EVs, I don't know what shops are going to work on them, and sometimes the fairly what you would think is light damage may damage a major component, which unfortunately on an electric car is the battery, which is a big item. So your age, your mileage, your driving record, I guess your sex. If you're a male, it's probably going to be a little higher. If you're real young or also getting really old, could go up. The mileage thing, they would like to have more records of your mileage and the rest of that. And I guess in some states they're actually talking about charging you a tax per mile. So they're going to have to come out with a way, pretty invasive way of measuring that, some sort of GPS monitoring. But right now it's just kind of the honor system. But driving records, certainly. Yeah, if you've got a DUI, you're in trouble. Your rates are going to be higher. Speeding tickets, the rest of it. Location. Like I say, my experience in crashing vehicles has gone way up in winter driving in Alaska. So, driver's training, you can always embellish that a bit. Hopefully try to get your ranks down. School's performance, to a certain extent, I mean, they do find a correlation between somebody being a good student and not being completely irresponsible. But yeah, several quotes, easy to get, and yeah, compare those prices. So these numbers are way outdated now. Not going to spend too much time on them, but yeah, it does vary on a number of things. The litigations that have taken place in the state, the cost of repairs, the natural hazards. Okay, homeowners insurance. So this is something that people don't often use. You don't file that many claims. It could be fire, burglary, other items, but there's all sorts of different perils out there, and it's typically not that expensive. We're talking maybe $100 a month, but it's usually in your mortgage, and it's usually they put it in the escrow so that it's fairly transparent to you. But again, you can compare and change companies. So here's some of the things they talk about. Yeah. Most of this is transparent to us. We don't really care. We just want our stuff fixed. One thing that we are very concerned with is replacement versus actual cost. So let's say, you've got a big TV on the wall and this fire happens and, that TV's destroyed or whatever comes off. They'll say, well, that TV, yeah, you paid, I don't know, some exorbitant amount for it a long time ago, and maybe technology's changed, but let's say it's worth, $900 if you have to go to the store to buy it. They'll say, yeah, but it's a couple years old, technology's kind of outdated, it's worth about $300. And if you go to the store and you want to buy the same thing, you're going to be out of pocket. Versus replacement, they'll say, okay, it was this size, and we'll give you $800-900, whatever the cost is of that TV. So it makes things a lot better, obviously, if you can afford the replacement cost, because you'd be surprised in a fire, especially the things that get damaged are not necessarily burned. The firemen, in the best of their efforts, do tend to do some water damage, that's unavoidable, and also the smoke damage. And you wouldn't want to be in a situation, especially like with your clothes, where they're giving you replacement cost versus cash value. Trying to go to the store and buy new clothes when you've been given basically thrift store values for your previous clothes, it'd be pretty painful. Other structures, yeah. I've got a really unique lot line. I split up this property specifically. I've got this older shop shed that's quite useful, but it's uninsurable. It's not derelict, but it's, again, this place was an old homestead, and so I put the lot line to exclude that building. And I always get calls from the insurance company because they're whatever, they're looking at satellite photos and they see this other building on there and they want to know why that building's not insured, and I have to explain to them because it's not on the property, that's on a separate lot. So I went to pretty extreme measures to sort things out, to get things done. So part of it was also the structure would not pass when the mortgage loan was going to be processed. If they tried to inspect that home, that structure, they would say, yeah, this is a foul. We are not insuring that. And so I put the lot line over there. Personal property covered up to a specific amount, home inventory. So one thing about this is, okay, number one, if you're really into some particular hobby, let's say it's photography, guns, computers, whatever, and you've got a whole bunch of assets in a particular category, maybe it's jewelry, and you've got your general homeowner's insurance, and you think, wow, I'm really getting one over on these folks because I've got, $20,000 in jewelry and it's insured under my regular homeowner's insurance. That's probably not. If you read closely in the policy, you'll probably see certain category limits where maybe a few $1,000s for jewelry or something like that, and all that other stuff is excess. So if you do have something like that, you just need to talk to the insurance company and kind of fess up and say, I want to make sure I've got insurance for, these particular items. They'll have you, delineate them out and then get what they call a personal property floater. Sometimes they'll call it a contract rider, maybe an addendum. Anyway, all those things, they mean the same thing, an additional bit to your homeowner's insurance to make sure it's covered. And this home inventory too, if you just walk around, once in a while with some sort of video, whatever you're going to use, it could be your phone or whatever, and kind of take a video of your stuff, it would make things a whole lot easier, especially if you happen to store that video someplace, not in the house where it gets burned up with everything else. But the whole insurance filing your claim could be pretty tedious and painful if you have to reestablish everything you had. If you've got, guns, for example, with even serial numbers and models, that's going to go much smoother and much less room for error or overlooks. So, personal property. If you're a renter, you can also get insurance. Usually has a liability provision, so a lot of times tenants, or not tenants, but the landlord will insist upon it because they want to make sure, your portion of the liability is covered to the max extent possible. So that floater, itemized valuables. So it can be called a floater, a rider, an addendum, whatever. But something in addition to the contract. We talked about liability. So again, if you've got stairs that are covered with snow and ice and you haven't taken any measures at all, and your little Amazon delivery guy, whatever, you don't want to be in that position. You want to look that you're at least taking whatever measures you can. Yeah. Getting back to Germany, I had a neighbor, Horst. He was a lifelong German, and he was out there shoveling the sidewalks at 9:30 because that's when whatever city insisted that the sidewalks be cleared by. It's your responsibility. And as an American, I'm like, Horst, it's still snowing. I'm not going out there yet. Oh, no, yeah, you must. I'm like, whatever. So, anyway, it could be a liability issue if you create or allow a hazard to continue. Other types of living. So yeah, if you're going to get stuck in a hotel while they're rebuilding your house, and other things that can be put in there. So factors that affect it. So the value of the home, obviously, the deductible, location. When you're getting auto insurance, they will ask you, how far, or maybe they'll not even trust you. They'll do their own math, but they'll figure out your distance from perhaps fire hydrants, and certainly from the closest fire station. Degree of protection, do you have all the smoke alarms? Do you have that? Do you have a wood stove? They're not going to be happy with that. Discounts, yeah, if you have maybe both your vehicle and your home insured by the same company, sometimes that makes sense. I don't, because I've got a couple different insurance companies for vehicles because, some of the classic stuff, and then a regular insurance company. So again, you have to shop around and compare, but keep in mind there are discounts available if you keep them with the same carrier. And again, it can change. Oklahoma, go figure, might be a tornado coming through now and again. Florida, they pretty much have every hazard. Texas, so Idaho, yeah, not known for a whole lot of natural hazards, and that could be the driving factor. So, yep, things you can do. Stay with the same company. So again, there's going to be a tendency. I switch insurance companies now and then based upon what's a better deal. Companies change, and their rates change and new things emerge. So shop around. I'm not a big proponent, like I said, of having a local insurance. Well, actually, I do for my business liability and my property stuff. I actually have one of the native corps has got an insurance company that's quite reasonable. So renter's insurance, yep, typically a good thing to have. A lot of times it's contingent. It'll be in the lease that you must have some sort of insurance. Umbrella. This is kind of cool. Big picture is the scams out there in terms of insurance is somebody will come door to door or approach you somehow and they'll say, we're offering you insurance for cancer. If you die of cancer, we'll give you $1 million and only cost you, a few bucks a month to get this type of insurance. The problem with that is when you limit things, it's a good bet for that insurance company because, you could die of a number of things and they're only going to pay off in one specific case, and they know that it's just probably not going to happen. People aren't going to collect on those policies. What you want is a more general policy, an umbrella policy. So a lot of times it makes sense to get a umbrella policy of, say, like $1 million or something like that. Pretty affordable, and it just means if anything, any kind of peril causes, I am deemed to have caused some sort of damage to some other party, my assets are protected. And so, yeah, wealthy people definitely will have it, but even people of modest means may get it at a certain point. Alrighty, so that handled home insurance and vehicle insurance. Health and disability insurance. Okay, the big picture here, and I'm not trying to aggravate people, and I'm not trying to say people should not be taken care of, but the primary problem with health insurance is involves people, and people are not like cars. They're not property. They're not objects, and so it's this notion of a pre-existing condition. If you had pre-existing conditions in vehicles, it would be, you go to the insurance company, you say, yeah, I want to get insurance for my truck. And they say, well, what type of truck is it? Well, it was a Silverado, but it's wrecked. I totaled it out last week, but I need to get some insurance for it. They're like, well, wait a minute. We don't insure things that have pre-existing conditions, and the same thing with a house, Yeah, part of it got burned down last week, but I want to get insurance for it now. So you can see it's, if the person already has a condition, it needs to be taken care of, but insurance really isn't the model that fits. It's a poor fit because, everybody's got some sort of pre-existing condition. There's some sort of genetic history or propensity for one ailment or another. And so can companies make money doing this? Well, they can, but they do it by kind of overcharging or excluding certain things. And so it turns back to where it's more of a government type responsibility. I'm fortunate. I was a veteran, so I have VA insurance, and VA is done individually by the states and by the whatever. I'm sure a lot of people's effort. The VA here in Alaska is I'd be the first to admit it's pretty exceptional. They do a pretty good job. If they were to try and do that for the general public, it would probably not work because it would just be cost prohibitive. So I've been in the private insurance in Alaska and also in the VA system, and yeah, to tell you the truth, the VA was quite a bit better. But anyway, one of the big picture things that we lose track of on kind of the health insurance model is that this fact that where people get their insurance. If you listen to politicians and all, you would think that the Affordable Care Act, the Obamacare, whatever you want to call it, is a primary insurance for a lot of people. No, it's just a very small group. Most people get their health coverage through their employer. It does kind of make sense in that an employer has a big pool of folks generally, or they're put in a big pool. And so, again, they can kind of spread the cost across all those employers. It doesn't eliminate the whole pre-existing condition thing, but that's always going to be a difficult thing. Other people, it looks like, 17% through Medicare. So Medicare is people that are, 65 or older folks. Medicaid is basically welfare. So a lot of people who apply for Affordable Care Act, they're in such financial straits, or they will be when they try to pay for the Affordable Care Act, that they're going to be deemed that they actually qualify for Medicaid. And then CHIP, that's dependents, children that are covered under that program. And then the Affordable Care Act, also called Obamacare, whatever. Again, it's a political thing. Is it going to be fixed by some politician? Probably not. Way too good an issue to be able to motivate voters each time that it's either going to be gotten rid of or improved or whatever. And so it's more useful to politicians to have that as a issue. And I don't know how they'd actually fix it, even if they wanted to. But I don't think they necessarily want to. It's better to have an issue to fight over. And then other people, 4%. And then you look down and you go, wow, 29% are uninsured. That's horrible. Well, some of that is people that are in transition. And I'm not going to lie. I mean, some people are uninsured. But there's also that sort of uber wealthy class that doesn't want to pay for medical insurance. And they'll pay out of pocket when they're sick. If you go to a hospital, a doctor or whatever, and say, I'm a cash payer, they'll say, oh, okay, well, here's the pay schedule we use for you, and it's going to be about 1/4 the price of the insurance companies, because the different, if an insurance company files a claim against the hospital knows that they're only going to collect a very small portion of it. The insurance company has certain limits, and they're not going to pay the stated price. They're going to pay a much lower price, and there's going to be a lot of bureaucracy, a lot of other things in just getting that money. And if you walk into a hospital and you're willing to pay cash as you go, it can be actually quite reasonable. So anyway, there is a certain segment that tends to go without health insurance and just pays for it. So yep. So not only offered by private insurance, but also the government. So the using health insurance it's difficult. It applies in certain cases, but especially in terms of catastrophic care and pre-existing conditions, it just doesn't fit the insurance model very well, and it never will. Anyway, that's why it's a problem, and that's why also when we talk about bankruptcy, the number of people who are in bankruptcy, the number of people where it's attributable to medical expenses is off the chart. This is the cost that we're paying in the States. So this is the most current they got. So their data is already a couple years old. But yeah, we pay quite a bit. Now again, we have a fair amount of innovation that we pay for, and a fair amount of drug company stuff. But I can tell you that there are certain things I've being international a lot of time. I had a good friend who's in the Dutch Air Force, and his wife was diagnosed with cancer, terminal cancer. And I don't know what they would have done for her in the States, but the Dutch in the Netherlands, they gave her some magnets that might assist her in her whatever. But they weren't spending any money trying to cure whatever. And not that it could have been cured, but they they had limits, and sometimes in the States, they will work on things that maybe there's just such a small chance, and it's incredibly difficult when it comes to health, and especially terminal illness. So we talked about the cost of health insurance. 1 in 5 workers uninsured. Okay, so these guys are trying to make the case for basically socialized medicine. I'm not saying what's good, what's bad, but they're approaching this with a definite bias. Yeah. Pre-existing conditions, always a big deal. Renewability, rehabilitation, mental health. So a lot of times those coverages perhaps are overlooked. Well, not perhaps, are overlooked. Pregnancy, I'm not going there, but that gets super controversial. Whether the way different insurance companies handle that, different states handle it, different societies handle that. Dental and vision, surprisingly, these fit more of an insurance model, and that's why if you look comparatively what it costs to get like laser eye surgery compared to other medical procedures that are that involved, it's incredibly cheap. And that's because there's an open market, and there are some, the dental and vision, they kind of make the case for why private insurance might have a future. But it's got to be some sort of combination thing, because the pre-existing condition thing is a huge issue. Deductible, coinsurance, stop loss, coverage limits, coordination of benefits. So a lot of things that go into that. Deductible just the same. Coinsurance, what you want to be careful of. One of the primary things from a personal finance standpoint, if you're going to be, married or have some partner who's got, where you share insurance, my advice to you would be figure out, and you're both employed, and say both employers offer insurance, pick the better one and cancel the other. Having two competing insurance policies, especially in the medical realm. For a while there, I had both private insurance from the corporation I was working for, and then also through the government, and trying to get those guys to sort out who's going to pay for what. They would much rather argue than actually pay. If you go to when you fill out your insurance paperwork and you just show a single insurance company, it just makes life much easier. But anyway, potentially it could save you some money as well, because you would not be paying for two health insurance. If you have two medical policies, you don't have twice the insurance. You have literally one half the insurance. So sort that out and go with the better company. Expenses not covered. Yep, they do have some tax, incentivized plans out there. They'll try and improve that, and hopefully, there'll be some improvements made in the healthcare realm. Right now, it's pretty devastating. Medicare. So again, people over 65. I'm not going to spend a lot of time on this because you guys are younger for the most part, and you'll obsess over it like all the senior folks do when they get to be that age. But it has gotten more expensive because there's different things. People on Medicare generally vote, so they're fairly well served. Medigap, yeah, there's sometimes some gaps, and again, watch bad network TV and you'll see all sorts of commercials about things that people are missing. Prescription Act, yeah, that's changing again, so I guess I didn't need to pass over quite that quick, but things have evolved. Medicaid, so again, kind of a welfare program. It's a pejorative term, but certain people are covered by it, state by state. Affordable Care Act. Yes, it is going to, and this is, it's passed in 2010. Contentious, but we're 15 years on, and it's still there. Long-term insurance. So again, can be quite expensive. I'll tell you just a slight anecdote. There's people I know in Belize. They run a little coffee place down there, and the guy's fairly young, and his wife is as well. But his wife, she had some sort of dementia, and was going to be in a home basically up here in the States, and they ended up moving to Belize. He runs a coffee thing and has maybe a little restaurant also on the side, and his wife's mother has her own place with a full-time caregiver and all that stuff for 1/8 of the cost that it would be here in the States. So, granted, they're not making as much money down there, but their quality of life is pretty good. And they were literally, their decision to move to Belize was driven by the long-term care insurance. So, anyway, it can get quite expensive, and if you delay, it gets even more expensive. If you're in a situation where you're, 60 and your health is starting to fail, it's probably going to be a problem. If you're younger and you have some sort of employer-sponsored plan, but again, do your research on that company before you opt into that sort of plan. It's a long-term thing. Hopefully, you won't end up in that situation, but it's one thing to prepare for. And all kinds of things you need to check into when you're looking at it. What the coverage is going to be, just, and it's tough because you're looking for something that hopefully you wouldn't need for, 20 to 40 years. Provision, so the better the policy, obviously your age at the time of getting it and what your current health is. Pre-existing conditions. It always comes back to that. Most people, well, depends how it happens. So. But usually, not usually, but sometimes people have a home. They sell that home, and all that money is not passed on to the heirs. It's sometimes given to long-term health care, and that's how it's done. Disability insurance. So this is you're working, in most cases, and let's say you're a roofer and you fall off the roof. Well, they can put you back together, but you're probably not going to be climbing on roofs anymore, so you're not going to be going back to your own occupation. But they consider you, well, we're not having to pay for your disability because you had any occupation, so you can sit in front of a desk just fine. You can still work, you just can't work up on roofs, so we're not paying. So that's what they're talking about there. Disability insurance, yep. Different ways this is going to come. So this is why when you're injured on the job, that's why they want the reports and everything done, because it's going to make a huge difference in terms of who pays for it, how long it's paid. That's why they're so kind of obsessive about when you get hurt on the job, why the details are all captured. And in most cases, it does, behoove you to have it happen on the job rather than at home doing something stupid. Can be limits on it. Waiting periods, non-cancelable provisions, renewability, and then, check on the costs. Again, if it's generally offered through the employer, generally a better deal than just going out and seeking insurance. All right. So, like I say, there'll be a whole nother, not lecture, but whatever, video on what to do with the midterm exam. So it's going to be on Blackboard, no Proctor, even RP now has kind of failed lately. So 40 questions, multiple choice, 60-minute time limit. When it stops, it stops. You're not going to have time to do it open book or any of that. You couldn't get through all the questions. Watch the review video. You could have a calculator handy, but it's not going to help you out. Well, not going to be necessary is what I mean. So, all righty.